Hello students, we have studied the long-lived assets part 1 up to 25 slides in our first video. Now in the second video I would like to discuss the rest of the presentation with you. During this presentation we are going to learn what is regulated utilities, how to capitalize and dismantling assets, then how we are going to account computer softwares according to its stages, then we are going to distinguish between capitalized and expensing costs with regard to computer softwares, and accounting for oil and gas explorations, and we are going to analyze the adjustments for capitalization and expensing. After learning this video, you would be able to account for regulated utilities, then how to cost the computer softwares and how to account it, and you are going to compare the financial reporting stages of oil and gas explorations and other adjustments for capitalization and expensing with regard to financial reporting. These are available for you to understand how we are going to analyze the financial statements of each industry for better presentation for the students as well as for the better presentation for companies to understanding about the company or the PLCs. Then I'm going to start my presentation with the regulated utilities. When it comes to regulated utilities, most of the time, the electricity, natural gas and water is governed by the government, because these are public service and there is substantial regulation involved in it. Most of the utility companies have to purchase the right to use the asset from the government. Since there is a copyright involvement, this is considered as an intangible asset. When it comes to regulated utilities asset capitalization, the government or the utility company may have the ownership of the asset. But if the company has the right and if the company has the risk, then the asset can be capitalized. But if the company has used this asset but they don't have the risk lies with the government, then it should not be categorized as an asset. It should be expense, which means the key is the risk of the ownership. If the risk lies with the government, then it should be capitalized. No, it should be expense. If the risk lies with the company, then it should be capitalized. If the asset identified and recognized, which means if it is capitalized, then it should be depreciated according to the expected useful life. When it comes to decommissioning cost, dismantling means the costs are difficult to identify, right? This is difficult to predict. Then IFR says the decommissioning cost should be added to the asset and there should be a provision. This provision is based on the present value of the asset. And we have to depreciate this asset based on the normal useful life, which means the decommissioning cost or dismantling cost should be depreciated over the useful life and it should be capitalized. When it comes to accounting for computer softwares, you can see in the computer softwares there are three main stages involving research and development and the production as well as the maintenance. The research and development cost should be expenses and the production should be capitalized. But when it comes to maintenance and customer support, it says it should be expensed. When you go through this table, you can see all the application in the development phase should be capitalized. What are the costs we are going to capitalize? The designing fees, internal salaries, benefits, then external consultant fees, traveling. When it comes to traveling, it should be 100% project related. Cost should be. Then the hardware installation, if we are going to get a box for the software, then the other hardware it is necessary to buy for the software, it should be capitalized. Then the conventional cost and testing of this new software should be capitalized. When it comes to outside cost, other than the application, the enhancement or upgrade cost should be capitalized if it is increasing the functionality of the useful life, and the hardware and installation cost of an independent equipment should be capitalized as well. But when it comes to non-capitalized cost, it should be expensed. What are the costs we are going to expense when it comes to softwares? The vendor product evaluation cost, then data migration cost, training cost, maintenance and administrative cost. These cost should be expensed to the income statement. When it comes to software, what are the costs we are going to depreciate? What are the things we are going to impair? These software should be depreciated with a useful life of 5 years, unless it is specifically mentioned. And depreciation should be checked year by year. And when it comes to software impairment, why we are going to impair it? We know that we are going to impair the intangible asset. If we can see there is a probable, which means there is a likely that this software is no longer in service or it is outdated, obsolete, then it should be impaired in the income statement. When it comes to oil and gas explorations, most of the Middle East countries and in Sri Lanka or Sapugaskanda use the accounting for this oil and gas exploration, which means we are going to explore the oil and gas. The development of crude oil, natural gas has two approaches for counting. One is SE method, successful effort method, and one is full cost method. They are having a significant impact on the net income and as well as cash flow. Therefore, as financial analysts, you have to go through in deeply to identify the accounting method and what its impact on the ratios. When it comes to successful effort method, SE method, exploration cost. If the exploration is successful, then it should be capitalized, and if it is unsuccessful, it should be expensed. And when it's come to appraisal cost, if the appraisal well or the oil well is successful or it is commercially viable, then it should be capitalized. If with the appraisal well or the oil well or the gas container is unsuccessful, then it should be expensed. When it comes to development cost, all the development cost should be capitalized and should be amortized. To which rate? It is based on the unit of production method. And we have to test the impairment regularly. Right? But when it comes to development cost of building infrastructure, it should be depreciated since it is a tangible asset. Then it should be depreciated based on the useful life. According to SC method, what will happen to the production cost? Normally, production costs are charged as expense based on the matching principle. But if this production is increasing the production capacity or the number of barrels, then it should be capitalized. According to the SC method, what will happen to the abandonment cost or decommissioning cost? Normally, according to SC method, this decommissioning cost or abandonment cost should be capitalized, and we should provide a long-term provision. This long-term provision should be based on the present value of the asset capitalized value, and it should be depreciated based on the unit of production method. Normally, this abandonment provision or decommissioning provision should be increased year by year. In order to recover the full amount of the amendment at the end of the period. Then the increasing in the year by year should be charged as a financial charge in the income statement, like a provision for bad debt. Normally the increase should be charged in the income statement. When it comes to full cost method, all the exploration cost, if it is successful, should be capitalized, and if it is unsuccessful or if there is no discovery, then it should be expensed. As same as for the appraisal cost. If it is successful, then it should be capitalized. If not, it should be expensed. When it comes to development cost and production cost and abandonment cost, both SC and full cost method have the same principle, which means in the development stage, it should be capitalized and it should be amortized according to the unit of production. Then each year in the development cost, since it is intangible, it should be amortized and it should be impaired. When it comes to production, it should be expensed, but if the production capacity or the production increases, then it should be capitalized. When it comes to abandonment cost, it should be capitalized and depreciated based on the unit of production. Now, what are the analytic adjustments for the capitalization and expenses? Most of the cases for self-constructed asset, the interest should be capitalized. But you know, when the construction is going on, the asset value is lower. Then the capitalized interest should be converted to as an interest expense. Then, since it is converted as an interest expense, we know our net income will be reduced. Then, cash flow from operation is low. But what will happen to the cash flow from investment activity? It will be higher. Since the interest coverage ratio is lower as a result of higher interest rate, we can see the ROE, ROA will also be reduced. As well as there is no impact on the cash flow. Why? In a certain area, cash flow will be lower, and in a certain area, which is in the investment area, cash flow will be higher. Therefore, no impact on the cash flows. Since when the production is going on, project is going on, the useful life of the asset, the useful life is going down. Therefore, the income will be higher because we have a lower depreciation amount. As well as we can see there is a higher interest rate, higher interest cost. As a result, higher interest coverage ratio can be seen, as well as due to this there will be a higher earning before tax, which means EBIT will be higher. These are the adjustments for capitalization and expensing for analytics, and please go and refer these slides and areas of the website, because you can have proper understanding with regarding to oil and gas industry, then computer software industry and other essential analytics which is needed for financial statement analysis. Go through it and read carefully this website as well. If there is query, please comment on the web link which is in the Google Classroom. Thank you and have a nice day.